all of you can agree with me that no matter the strategy you trade, market structure is going to play an important role in that strategy. So that's why in this video, I'm going to be showing you how to market structure correctly. And please, no matter the strategy you trade, you should know that market structure is always going to be an important part of that strategy. So that's why you should watch this video till the end so that this can improve your trading skills, this will improve your technical skills, and this will improve your chances of actually making profit from the market. So let's dive into this video. And before that, if you are new to my channel, make sure that you have subscribed to this channel because I put up educational content like this every week. So make sure that you have subscribed and hit that notification button. When I upload the next video, you will be the first to see it. So in this video, I'm going to be showing you multiple examples of this and illustrating it with extra examples that will help you to solidify your knowledge of market structure. So let's dive into it. On our screen here, we have the first pair, which is Euro JPY. I have many other pairs like AUD, USD, which we are going to be going through. There are literally many pairs that we are going to be going through, right? Many trades that I took and on many pairs. So we are going to be going through all of this. You can see here, that's market structure. It doesn't matter the strategy you trade. Any strategy, it's built upon market structure. If you know a strategy that is not built upon market structure, you can tell me in the comment section, then prove me right in the comment section, and I will tell you that how that strategy use market structure. You can see this is literally market structure. There are many of these. If you go to Great Britain Pound, JPY, if you go to Great Britain Pound JPY, you are going to see literally the same thing, right? If you focus here, you are going to see multiple trades. These are all market structure. So it doesn't matter the strategy you trade, you are going to be very good at this if you at that strategy, if you master market structure. If you're an SNC trader like me, or if you're an SNR trader, Malaysian SNR, you are an alchemist, you are an IC3 trader, all the other strategies you can think of, right? Basically, majority of them are built on market structure. So market structure is like the stepping stone of the market. So if it doesn't matter your strategy, make sure you watch this video to the end to improve on that strategy with this market structure. It's not specific for a certain type of strategy. So stick around, right? Let's dive into the video. So before we go into the video, we will have an illustration to make sure everybody understands the difference between swing structure and internal structure, so that within the video you will not get confused along the way of which we are talking about. Because in the market structure, you know that each time frame, right? If you go to, if let's say you go to a 1 hour time frame and you look at the 1 hour, the market might be trending, being in an uptrend, but if you look at the daily time frame, it's actually in a downtrend. So it's good to understand where you are in the market so that you know where you are targeting and how you plan to take the next trade, whether you are following the 1 hour or you are following the daily time frame. So let's say this is our daily time frame. It's bearish, right? It's bearish. Now, inside this daily time frame, inside this pullback, you are going to have a super trend. You are going to have a counter trend, right? Like this is going to be going up. That's how the market moves on a smaller time frame. So now what we refer to this is a correction. This is a correction. But now on a smaller time frame, let's say you were on the 1 hour here. If you go down to the 5 minute, you are going to see a correction move. Now, what you need to understand here is, okay, the direction of the market is initially bearish. So now on the bigger time frame, I'm bearish, but on the smaller time frame, I'm bullish. So I can look for break of structures here and look to trade this market to the upside, but I will not be targeting anything above this zone. I will not be targeting any extra any extra zone here. What I would do, if I buy from a demand zone here, I should be targeting where the next internal break of structure is, just like that, just like that, just like that, right? Make sure you target just the internal breaks of structure, because for this market to continue in a downside, this internal structure is going to tell you, right? This internal structure is like your friend. It will tell you, it will eventually indicate to you, tap you on their back and tell you that, okay, now this market is looking for a bearish move. How will that happen? When you start seeing that this structure will this internal structure switches from being bullish and takes out the first low and becomes bearish. something of this sort, right? Sorry, it takes out this first low. Once it takes out this first low, and you see now, you know that, okay, this internal structure has actually switched bearish and it's aligning with our swing structure. Now you can start looking for your pro sells. You can start looking for your pro sell, something like this. Now you also need to understand that even on this leg, we also have minor internal structure breaks. Now these internal structure breaks will serve a lot to you. For example, right, this internal structure breaks. There are some people that will just look for a zone here on the internal structure break, and they sell off this zone and they just target the next break, where the next break of structure is. But there are some that trade swing structure, they will want to catch this whole move. So it doesn't depend, it doesn't matter what you trade, right? It doesn't depend on your targets or anything. What you need to know is you need to understand this swing structure. You need to understand when this swing structure, your internal structure aligns with your swing structure, right? And you need to understand when your internal structure is against your swing structure. Because if you look at this, vividly, you see that this is a downtrend here. This is a downtrend like that, right? Now, when the market is all this internal structure, once this internal structure is trading in the direction of the downtrend, you know that your internal structure now aligns with your external external structure, right? So it's trading in a direction. This gives you high probability trades. Now, when we have a correction, a correction like this, we know that, okay, now this is a correction on our external structure. So we are looking for a counter buys, and we need to be careful where we place our targets. These zones, we need to be extremely careful where we place our targets, and we need to listen to this internal structure, right? You listen to the internal structure. Once you start seeing that this internal structure starts breaking lows like this, it breaks a low like this and somehow starts moving downwards, you already know that, okay, if you are in a trade, you got in a trade here, you should have gotten out here. Or if you are trailing, when this move happens here, you already know that, okay, we are already having an external structure switch. The internal structure is switching to follow the pro structure. So now let's go over to the chart. We have multiple examples on the chart which I would like to show you. I'll be starting with AUD USD. This is Owenda, that's the broker I use. So now we have this structure here. We have this structure. Now we identify our structure here. This is how we identify our structure. For those of you that have been following me for some time, you know how I mark out my structure. I wait for inducement to be taken out, then before I validate a break of structure. So basically what we got here is this, right? We got the market dropped off here, made a pullback and push to the downside. After pushing to the downside, the market push above, taking out this our pullback. Now this our pullback, it's what I call an inducement, which needs to be taken out before the next break of structure needs to be confirmed to be valid. Now after that, we had the market literally push below and give us a break of structure. So now here we have our valid break of structure at this level. Now, if we continue, if you go ahead, you're literally going to see that the very thing repeats over here again. We have the market creates a pullback here, pushes below, creates another pullback, eventually takes out that pullback and pushes below, giving us a break of structure. Now, when you start having breaks of structure to the downside, you already know the direction of the market. All you need to do in this case is look for entries, right? So what you need to do in this case is consult now your strategy and see how your strategy fares with entry criteria, how your strategy fares with entry criteria, and how you can use your strategy to get on these entries. You already know market structure. Market structure is like the basic, it's like the foundation. It shows you what you need to know about the charts, how to get the direction of the chart. So after this break of structure here, what we get is another break of structure. Now, this break of structure here, it's very important because initially it did not close. It did not close. Me, I personally, I don't take candle wicks for a break of structure. So I had to transfer this break of structure to this zone here, right? I do a transfer like this. That's why I map out this zone here. So now you see that this zone got swept here. This zone actually got swept and price continued to the downside. So basically, this is how I map out my structure, right? I map out my structure. I make sure I wait for the market to take out an inducement before giving us a break of structure. You can see this was our last break of structure in this case. So it doesn't matter your strategy, get your break of structure right, and you are going to be just fine. So there are literally many examples of this. And yeah, if you have not checked out the Telegram group, I've been sending each of these trades in the Telegram group. If you go to the Telegram group, you are going to see multiple of the trades. I literally send trades on the Telegram group like it's a premium group, which is just a free group. So I'll be leaving the link in the description of this video. You can click on it and join the Telegram group, right? You yourself, you can evaluate most of the trades we took last week and how we have been doing, because majority of the trades we took are hitting TP. What people offered as payment, as paid signals, we offer it for free, and majority of them are hitting TP. Those people that offer those paid signals, majority of them don't get the win rate we are getting from the setups I've been sending in the group. So make sure you check them out. And yeah, let's continue. So that was AUD USD. If you go over to Euro JPY, you are going to see literally the very thing. Market structure, right? There's nothing that can beat market structure in the market. Once you have your market structure, you already know where the market is going to. You look at this, you think this majority of this is from maybe a secret strategy that you don't know. No, majority of these are from our entries, are from the market structure I taught you. Even this trade currently, it has not yet completed. Next week, we are still going to go in to sell this trade, right? That's all market structure. That's all market structure. We had a break of structure here and we waited for liquidity or an inducement to be taken out here, right? It doesn't matter how you call it. It doesn't matter how you call their zones. We literally waited for that and we traded off a supply zone at this level. So there are many examples to this. Get your structure right and you are going to be just fine. No, don't forget about the thousands of strategies you are being taught out there. If your strategy is not based on market structure, you are going to make a lot of mistakes in the market. So that's it. That's it, right? You see that the market is super bearish here. If I zoom in here, you see we had literally a break of structure here. It got to a point where I don't even need to mark all of them. We had an inducement here. It got taken out, right, with this zone. And then we had a break of structure. And then we waited for market to take out an inducement. And we sell off this zone, right? That's it. These are charts I've sent in the Telegram group. So if you need to verify all of these things I'm saying, you check the Telegram group, right? So we have this move here. The move had an engineer liquidity before it. After that, it tapped into an order block or a supply zone, and we sold off. And that's the very thing, right? We're anticipating the very thing here, but the market did not come into this zone. It created a new break of structure down here, right? This is a new break of structure, and after taking out liquidity, it's selling from this supply zone here. So if you have any questions, you can leave them in the comment section. I will reply to them. And yeah, so I do offer a paid mentorship. I take just one student at a time. So if you are interested, you can leave a comment or you can contact me on Telegram. Just click on the link of this video. You can just check the description of this video. You go to the Telegram, then from there you'll see my personal Telegram username to contact me. Just click there. You get directly to my inbox. So let's go over to other things, to other examples. I did talk about internal structure and I did not really explain it on the charts. Now I'm going to explain it fully on and how you can distinguish it from your external structure, right? So on our chart here, on this chart, we have this market, right? This market pushes down like this. It pushes down like this, pushes up, creates a break of structure. And from this point now, we have our internal structure that just started pushing bullish like this. So how do we actually identify this in the market? So if you look at this diagram I'm going to draw here, if you look at this diagram, look at it, right? The market was pushing down like this. It creates an inducement, it takes out this inducement and gives us a break of structure to the downside. Now, this break of structure in a smaller time frame also has small moves like this, right? Like small break of structures, small break of structures to the downside. Now, when you see that it has taken out that smallest break of structure to the downside in a smaller time frame and starts trending upside, that is a reminder to you that the market has switch from being bearish to being bullish internally. Now we in this case we still have our swing structure, right? This was our break of structure here. This was our break of structure here, BOS, right? That was our break of structure, and this was our strong high in this case. Now this internal structure has switched bullish here by taking out the smallest lower high here, right? The smallest lower high here, which is our valid break of structure in a smaller time frame. Because this move like this also have smaller break of structure in a smaller time frame. It's a mini trend on a smaller time frame, though it's following the trend. It's also a smaller trend on a smaller time frame. So now, once this change of character occurs here, this is a signal to you that the market is starting its internal swing pullback, right? This is an internal pullback. So now we know that, okay, this is our high here, and this is where the low probably is, right? The market needs to keep creating minor break of structures to the upside, taking creating inducement, taking it out, and creating minor break of structures to the upside, and continues like this. Now, when do we know when this is over? First of all, we need to have here, we are going to have some sort of a zone, right, which we are looking out for the market to react off this zone and sell. But now, when the market reacts off of that zone, we are not forgetting that we have an internal move here, right? When the market reacts off of this zone, we need to see that internal structure. We need to see this internal structure switch bearish. It switch bearish. If it doesn't switch bearish, if this internal structure doesn't switch bearish and the market continues printing us higher highs, we know that, okay, the market is likely going to take out this high, right? So that's the very thing we see on the charts here. If I look at the charts here, right, I have my inducement here. I do have my inducement here, right? You can see that when this inducement got taken out, we had our break of structure down here. Now, after this break of structure, we had signs. We had signs down here. We had signs down here that the market was switching bullish. Internally, the market was switching bullish internally. If you look here, you see that, okay, the market gave us a smaller change of characters. This is, by the way, in a smaller time frame. Some of these I marked them in a smaller time frame. It gave us a small change of characters, then started trending up like this, right? Started trending up like this. So we started looking for buys here. We know that our internal structure just switched bullish. So we started waiting for inducement to be taken out, and we look for buys at this zone, right? So we started following this internal structure closely. And when the market got to this zone, when the market got to these zones here, the market did not give me any direction that it wants to change. This internal structure still remained bullish like this. It kept on creating higher highs, higher lows, higher highs, higher lows. So I did not have any reason to sell from here. I had the reason to follow up my internal structure. Those that have been selling from here in the group made a lot of losses because they were not aware of this. Internal structure will be the first person to tell you that that this market is going to switch from being bullish to bearish. So you need to pay a lot of attention to internal structure. So now if when your internal structure turns bullish like this and it doesn't respect your swing high, now you can then have now a change of characters at this level, right? At this level, we have our change of characters to the upside, and the market is going to respect this, right? And also you see now from here, that was your internal structure, and it's supporting all of this narrative. So the market is a narrative, right? You need evidence to support your narrative so that it can work in your direction. You don't go and counter trade the market. That's how the market works. And for now, we are going to be keep looking at the buys for this trade at the moment. Then if I go over to AUD, USD, CHF, I'm going to show you a likelihood of the same thing, which I've been teaching. So if I show you here now, on a daily time frame, we had this market, it has been pushing up like this, right? Pushes down, it pushes down, takes out our inducement and gives us a break of structure to the upside. Now this is a daily time frame. I would like to remind you that this is that was on the daily time frame. These markings were on the daily time frame. Some of these break of structures here did not exist. So now on my daily time frame, I know my daily bias, and I know that okay, the market has taken out my inducement here. It has given me a break of structure. It has pushed up here. This was our last break of structure on the daily time frame, and we had our inducement here. So when the market came now, took out this low, it took out this our strong low, we had a change of characters. Now, this change of characters here, this change of characters indicated that the market wanted to push below. Obviously, you might not be able to see all of this in the market. Sometimes you discover them late. So I myself, I discovered this late while price was somewhere around here. So after price gave us a change of character, it respected our supply zone here, this supply zone here, and dropped off. When it dropped off, it gave a change of character, then retraced to take in the more orders. Then it gave an internal break of structure. Now, why do I call this an internal break of structure? That's because it has not yet taken out this major low after it gave the change of characters. This was our major low. It has not yet taken it out, but it's still showing signs of being bearish because the price keeps taking out lower lows and more lower lows, right? Like it did here, it gave an internal CHOCH here, and then when it went up, tapped into that zone, it gave another one here. This is an internal break of structure. That's why I label it an eyeballs. Now, when the market was pushing up now to this zone, when the market was pushing up, it left this inducement here, right? So when the market pushed up, I was looking at this market and I was planning to sell from here. But when the market was pushing up, it swept this inducement and gave us a change of characters here. So I immediately got into a sell. I was targeting the extreme zone. So when the market dropped and we had an internal inducement, it got taken out and the market tapped into a zone here, I had an internal break of structure, right? So this is where our major change of this is where our major break of structure occurred. This is where our major first break of structure occurs. So when that break of structure occurred here, I look for another short position to sell off of this zone. So that's a short position. And for now, what you can see is that this market is currently bullish, right? Now, the reason for that is that the market has actually mitigated an order flow on the daily time frame. If you look at this, the market has mitigated this order flow on the daily time frame, and it has started to push to the upside. Obviously, inside the week, we are going to see if this mitigation of the daily time frame will go with more bullish structure, like this, right? We are going to look at that within the week, but for now, that's where the market is reacting from. So if you have any questions on this or whatsoever I teach, you can leave them in the comment section. I will be looking at it. And thank you. Thank you for the support you have been giving me over the years with the YouTube channel. I really appreciate that. And I hope this video, you can make this video to go viral as well. So make sure you share it with your family. They will learn a lot from it, and fellow traders, they will learn a lot from the video. People that are trading SMC have been asking me, why do I always mark the structure the way I mark the structure? And yeah, for me, it's like it prevents you from entering into a lot of problems in the market. So first of all, we have the liquidity concept, right? We have the liquidity mindset. You know, efficiency is a liquidity concept. You need to take out liquidity before it moves. That's the first thing. Now, to a non-SMC trader, I'm going to explain this in a way that the person can clearly understand without using any SMC term. Let's say you have the market, it's moving up like this, it creates a pullback, and now you mark this as a break of structure, you mark this as a break of structure, you mark this as a break of structure. You will see that if this is a break of structure here, right, everybody will be able to see this, and now you see that there's no need for anybody to be learning on any other strategy or learning others, which they can just follow this and easily make money. Now that's one of the point. The next point in my list is normally often in the market you are going to see something like this. The market crazes, does this, takes out this low before moving out. Now, once the market does this, right, if you mark this as a break of structure and the market does this, you already have a change of characters. Now you're anticipating for the market to push up here and drop. But what the market normally does is the market comes here and just continues to the upside. Now you see that you fall for many change of characters at these zones. You fall for many change of characters, right? For somebody that trades just the normal SMC, you fall for many change of characters at this zone. Now, if you go into the market structure, right, you're going to see a lot of this. It repeats nearly all the time. Let's just head over to the market. Let me show you one scenario. Now, if I zoom out here and I use that method, you see that the first break of structure I'm going to have will be here. And obviously this one was valid. Then we're going to have another break of structure here. Then we have another break of structure here, right? After all these break of structures, you're going to have one here. Now, at this zone here, right, you see that you are going to have a change of characters. When you have a change of characters, you are planning now to sell from here, right? You see how the market comes, gives a small reaction from here, gives even a small change of characters from here, and it continues to the upside. So these are traps that the smart money that are being laid out for the smart money traders who don't actually know what they are doing in the market. There are lots of these scenarios. There are a lot of these scenarios in the market. Like for instance, you see another one here, that's a valid pullback. If you mark that as a break of structure, you mark this as a break of structure. When the market comes here, now you now mark this as a change of characters. You fall for this trap now here. And when the market pushes up to this zone, you are looking to sell, and the market just fakes out and continues to the upside. So these are some of the scenarios we go through as SMG traders, right? It's good for you to know which one is a good zone to trade from and which one is the fake zone. Like for example, you map this is another one here, right? If you map this here, you have a change of characters. You'll be struggling to sell here while people are struggling to buy, and the market just goes up. So guys, I hope these lessons have been this I hope you have learned something important from this lesson. If you have, then please subscribe to the channel, leave a like, and leave a comment on which strategy you think doesn't use market structure the way I teach. Or if you know a strategy that is not built upon market structure, you can let me know. So if you look at this, right, if you look at this, with this you can catch many moves on this zone. Look at it. That's pure structure. This is pure structure here. Though I missed some of these moves, but I cannot tell you I caught all of these moves. Like you see from here, the market pushes up, it takes out an inducement, and it taps into this zone to rally up. The very thing here takes out an inducement, it taps into a zone here, and it taps into this zone and rallies up, right? That's a zone. That's a zone immediately below our inducement. Now, the thing with market structure is it will repeat majority of the time in the market, because when the market is trending, right, this is how the market moves. So if you are somebody like an SMC trader or somebody that normally uses market structure as this, I prefer a trending market, right? It's good for you to choose a trending market. And if you see from here, the market is still in an uptrend. The market has not given us any signs of a reversal yet. So guys, I think that should be all. My mentorship is coming up, right? Remember, one-on-one mentorship. The fees is not high. You can contact me on Telegram for that. I'll be leaving the link to my Telegram channel. And from the channel now, you can contact me. So I think that will be all for the video for today. If you want me to review my Telegram with you on to review the trades we took on Telegram this week, then you can leave a comment on that. I'll review that. Have a nice day. God bless you all.